Hi, Seth David here for the Fundira Ledger. And this time we're talking about how to enter payroll in QuickBooks, how to perform payroll entries in QuickBooks. We're going to use QuickBooks Online to demonstrate what we're going to go over today. But first I want to talk to you about some things kind of at a high level, the theoretical side. This way we can dive in. So we're going to go over two methods for entering payroll. There's the summary method and the detail method. And the difference essentially is dependent upon how much detail you'd like to have. The other part is whether or not your banking comes out of your checking account in the same manner in which you either prefer to or need to enter your payroll. And I'll illustrate, and of course the write-up explains this in great detail. Let me give you a scenario. The typical payroll model, especially if I'm using an outside payroll service, is that three payments come out of your bank account. There's the net pay, and then there's the tax payment, and then of course there are the fees. The fees are easy to deal with. I'm not going to talk about that much. I mention it in the write-up because it's necessary. That's very straightforward. When that amount comes out, you book a payment out of your bank account and book it to your payroll fees expense. It's the rest that's tricky, and as I point out in the write-up, a lot of bookkeepers get this wrong, especially if they're inexperienced. Experienced ones know what they're doing, of course, and they know how to do this properly. So one way to tell if your bookkeeper is experienced or not is check their payroll entries. If you see that the paychecks are split, then that's a good sign without even having to know the accounting inside of that. As long as you see splits in your paychecks, that's a good sign that the bookkeeper probably did it right and knows what they're doing. Bottom line is this. A lot of bookkeepers make the mistake, inexperienced bookkeepers make the mistake of booking the net payroll as the whole payroll expense. And then they take the tax payment and book that to the tax expense, which is a company expense. And it's wrong. You're understating the gross pay and you're overstating your taxes, and it's not always going to balance out. It doesn't always match up perfectly. In fact, usually it doesn't. Trust me, I've tried to clean it up based on that, assuming that as the premise, and it never balances when I do a quarterly entry or what have you. So the right way to book payroll is gross pay goes to the expense. Whatever the withholdings are is a negative. You subtract that from the gross pay to arrive at the net. Now, years back, I used to book those withholdings in all the details, right? They're made up of a bunch of different numbers. We have federal withholdings, state withholdings, and unemployment insurance and other things. What I learned over the years, especially after doing this for a while, is that I never actually needed that detail on the books, no matter how detailed I want to be about the payroll itself. So I started to learn to consolidate that and use one liability account called payroll liabilities. Very simple this way. I deduct the withholdings from the gross pay to arrive at the net, and then when we book the tax payment is actually split into two entries. The portion that was withheld from the employees and the portion that the employer has to pay, which is the employer's share of the taxes. And that's why it doesn't always balance out perfectly, because there are some taxes that are only on the employer side and others that are employee and employer matching, like Social Security and Medicare. So you can't assume that booking the net pay and booking the tax payment is going to balance out. In other words, one's overstatement isn't necessarily equal to the other's understatement. So really, really important to book payroll the right way. Now again, if I have my banking coming out in those three lump sums the way I described, net pay, taxes, and the fees, and all I care to do is book what I call the summary method, then it's very easy. I record the payments out of my bank account and I split it up accordingly using the aggregated amounts of all the employees' gross pay, all the employees' withholdings, right? So total gross pay for all employees minus total withholdings for all employees equals total net pay for all employees. And then of course we deal with the tax part, where we take all the withholdings that were taken from the employees plus the employer's share of the taxes, and those two added up equal the total tax payment. And again, payroll's easy. Let's see what this looks like using QuickBooks Online as the accounting software, so you can see an example, a very practical one, of exactly how to do this and how to get this set up. So first we're going to look at a scenario. Now I've given you a layout here that's pretty straightforward. I've got a few employees here with paychecks. There's myself, I'm the lowest paid employee. There's Meredith, she's the manager, and then we have Dawn Brolin. Now Dawn's the boss. She gets paid the most, right? So, of course, this is simplified, but the reality is your payroll reports give you this information. Depending on the payroll company, some lay it out more easily than others in terms of trying to translate from the reports to what you need in order to get the payroll entered. The big ones are usually pretty good. So you'll get a payroll journal usually, which will include all the individual employees' information. Again, the difference is in yours, you'll see the withholdings broken out into all the different things that I mentioned, like your federal and state withholdings and other withholdings and taxes, right? But basically, you can lump all that into one withholdings number. So you take gross pay minus withholdings equals net. And then all the way down below, I have my payroll totals, which totals everything above. So if we're doing the summary method, this is essentially what we need to book. So let's go over to my QuickBooks company and let's record that first part of the payroll entry. It's real simple. I'll record an expense or a check, right? And the payee would probably be the payroll company, which I didn't prepare ahead of time and add in, so we'll quickly add that as a vendor. All right, and then down below, we have payroll expenses, and then I have salaries within that. And let's see what the total was. So total gross payroll, $45,000. Then we're going to have payroll liabilities. And what does that look like? Minus $13,500. Right, and again, this is just for each employee's withholdings totaled up. Right, so the net is $31,500. Always make sure that agrees. So on your payroll reports, you'll see this part of it, or the equivalent at the very bottom, where it usually will say something like payroll totals. Okay, so I record this, and today's payroll date, we'll just go with today's date, the day I'm recording this. So save and close. And now let's take a look and see how that impacted my financial statements. First, the balance sheet, right? We took the money out of the account, and now we've got $13,500 sitting in payroll liabilities because I subtracted it. I withheld it from the employees. I took their money away from them and said, the government doesn't trust you to hang on to your money so that you'll be able to pay your taxes, so I have to take it away from you and give it to the government. And then, of course, all the reporting is done so the government knows how much they have paid in effectively, right? So that's kind of the point behind this. Now let's go over to the profit and loss and run that report. And very simply there we have the salaries total of $45,000. So again, I don't have the details. I don't know individual employees who was paid what. I can refer to the payroll reports if I ever need or want that information. Now, next part, the tax payment. We're going to record another expense. Okay, and down below, I put in the tax payment. Again, this is simplified, but this is the basic premise, and this is how it's going to be laid out. So the employer share might be $34,4250. The employee is the same $13,500 we previously took away from their paychecks for a total of $16,942.50. The employer share is an expense, right? It goes to employer taxes. So let's go to payroll expenses, and I put employer taxes as a sub-account, and it's $344,250. And then the next piece is the payroll liabilities. Now remember, when we took it out of their paychecks, we wrote a check and put it in as a negative number, and that went into the liabilities. Now we're going to write the check out with that split amount as a positive number, so payroll liabilities zeroes out. So here it's a positive, so the total is $16,942.50. Always confirm on your payroll report at the bottom, you'll see the total tax payment. Make sure that it agrees so that you know you're doing this correctly. So when I hit save and close, we can now go back to our financial statements. When I refresh, this is going to zero out because it's now been paid. Right? See? Paid. And we go to the profit and loss, and now we should see an additional amount for the employer taxes, and sure enough, there it is. And that closes out the whole payroll cycle when you're doing it under this method. If I click into this zero, you'll see how nice and clean it is. I have the $13,500 that came in from when I took it out of the employees' paychecks, right? And then the $13,500 going back out to zero it out. So, my friends, and keep in mind that the payment that comes out obviously will happen a few days later. So I probably should post-date this just so you can see it the way it's meant to look. Right, and now it makes more sense. The money comes in, increases the balance, the money comes out a couple days later and zeroes out our payroll liabilities. Now we're going to do the detailed method. The detailed method, and this may be a good time to pause if you haven't already and kind of go back over what I did, bring up your own company file, practice entering something like this. In the write-up, I'll make sure that this template is available to you so that you can kind of do it on your end, follow along, and make sure you get the same results. So if necessary, pause the video and then come back when you're ready, and I'm going to show you the detailed method, which is for cases like mine when you're a bit of a reporting junkie like I am, and you want each of these individual paychecks entered into QuickBooks so I can run reports in QuickBooks and see who's been paid how much. But I can't do it as a check out of the bank account because the bank account's going to clear it all out in total like we did here. So that's what we're going to see in terms of what this looks like. Now, off recording, I deleted the one entry that I need to delete because we're going to recreate it a little bit differently, which is the one for the net payroll. The taxes doesn't change, and the payroll fees, of course, like I said, that's real straightforward and simple, so that's not going to change either. In order to set our accounts up so that we can do the detailed method, we need a new bank account. It's a fictitious bank account. We're just going to call it payroll clearing. And it doesn't matter the detail type, you can call cash on hand. It's just a clearing account. Obviously, it's not a real bank account. And what we're going to do here is we're going to record each individual paycheck in this account as if it were being paid from here so that they'll add up to the total net pay that comes out in a lump sum from the bank account. And then we're going to record the payment out of the bank account essentially as a transfer to the payroll clearing so that it zeroes out. So now we're going to enter each individual paycheck. So first we'll enter mine. Other than that, it's the same exact process. So we're going to say, not new account. Let's go into the payroll clearing. We'll say view register. And I'll say new check. Right? Pay is going to be me. So now we want the details. I want the payees in here because I want to be able to report based on who was paid what. All right, for the check number, I might even put PR for payroll. And it's going to be the exact same process, but we're doing it for each individual employee as a separate payment. So, salaries, 10,000, payroll liabilities, minus 3,000, right? Save and new. Then we've got Meredith. Again, payroll for the check, salaries. Oops, I typed an extra character in there somewhere. There it is, and I believe she was 15,000 with 4,500. Payroll liabilities, minus 4,500. One more check. We have the boss. Don Brolin is the boss. Salaries. She gets 20,000, right? Yep, and then we take 6,000 out. For a net of 14,000. And when you're entering these, you should always check that their individual net pays agree, right? Because that's a good sign that you've probably entered this all correctly. So now when I say save and close, let's go back to the register and see what we've accumulated in here. Of course, I forgot to select the right bank account. So let's go fix that really quickly. We'll go back to, see if this takes me back to the profit and loss. Nope, that's the balance sheet. So let's go to reports, and we'll go to the profit and loss. And this may happen to you, so that's why I'm not bothering to edit this out and fix it and make it look perfect. I'd rather you see how to correct something like this, because guaranteed you're going to do the same thing at some point along the way. So we need to make sure we choose the right bank account. It has to be payroll clearing, right? So save and close. Over here, save and close. Save and close. So now let's go back to the register. We'll need to refresh it now. And now we've got 3 individual checks whose net pay comes out to 31,500. Let's see if that agrees with the net pay payment that's going to come out of the bank account? Sure enough, it does, $31,500. So now we get the payment that actually comes out of the bank account for the total net pay. And as I said, we record it as a transfer from the bank account to the payroll clearing bank account, right? So you can actually do it as a transfer here, or you can record an expense or a check out of the checking account. Either way works. You may want to, for bank feed matching purposes, record it as a check and not a transfer. It may not matter. Again, this is going to be the payroll company, right? And then if we're writing this out of the checking account, because that's where it's coming out of, this is the payroll clearing, $31,500, save and close. And now we're back to where we were before. So we have the right amount in the company checking, the liabilities still zero out just the same way. Let's go run our profit and loss. Actually, that's there. And sure enough, we have our salaries of $45,000 and our taxes of $34,442.50. That, like I said, didn't change at all, right? But same thing, our gross salary is $45,000. The $13,500 still comes in and back out. Let's look at the balance sheet real quick. And see how this breaks down. Again, it zeroes out, but if I click, I can see what's inside, right? And here we have this time it's instead of one payment for $13,500 from one aggregated payroll, we have each of the three checks, each putting their respective withholding amounts into the liabilities, and then we take the money out when the taxes get paid. So it zeroes out just the same. This, my friends, is how we book payroll, how we perform payroll entries in QuickBooks the proper way. Yes, it's a little bit simplified here, but the reality is all the numbers I've shown you, all the ways that you have to get them come off the payroll reports, and really the only difference between what I've shown you here and what you'll see on the payroll reports are the fact that I consolidated withholdings amounts into a single amount rather than showing each different kind of withholding that may have come out from the employee's paychecks. That's it. So as always, of course, if you have questions, concerns, comments, feedback, post them below. Don't forget to subscribe to us on YouTube and post your comments and questions right here at fundira.com/blog, right on the blog post, and we will be happy to get back to you with answers to your questions, comments, concerns, and responses to your feedback. Thank you so much. As always, I hope you learned something and had some fun along the way. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.